Did you ever think you'd see the day when China's economy would slow down while America's speeds up? It's happening right now, and it's turning the global economic order on its head. But what does this mean for the future of the world's superpowers? Stick around, because by the end of this video, you'll understand why this shift might not be what it seems and how it could impact us all. For over 3 decades, China has been the poster child for rapid economic growth, with many experts predicting it would soon surpass the United States as the world's leading economy. The Chinese miracle seemed unstoppable until now. In an unexpected turn of events, the U.S. economy is currently outpacing China's, defying the long-standing narrative of inevitable Chinese dominance. This reversal is significant for several reasons. First, it challenges the assumption that China's economy, fueled by massive infrastructure projects, a burgeoning middle class, and aggressive global expansion, would continue growing at breakneck speed. While China was once growing at double-digit rates, its economy is now cooling, partly due to structural issues like an aging population, a shrinking workforce, and a real estate sector in distress. On top of that, geopolitical tensions, particularly with the U.S., have led to trade disruptions and uncertainty, further dampening China's economic momentum. Meanwhile, the U.S. economy, often criticized for its slower growth and mounting debt, is experiencing an unexpected surge. This resurgence is driven by several factors, including technological innovation, a robust job market, and strong consumer spending. The U.S. has also benefited from a wave of reshoring, where companies bring manufacturing and jobs back to American soil, driven by supply chain disruptions and rising costs in China. Furthermore, massive government spending on infrastructure and green energy initiatives has injected new life into the economy, spurring growth in industries from construction to technology. But there's more to this story. While the U.S. economy as a whole is booming, this growth is not evenly distributed across the country. Nearly 2/3 of U.S. states are growing slower than the national average, which begs the question, what's driving the overall economic surge? The answer lies in the extraordinary performance of just a few regions, with one state in particular standing out, Florida. Florida's role in this economic renaissance is both surprising and significant. Traditionally known for tourism and agriculture, Florida has transformed itself into an economic powerhouse. It's now the fourth largest economy in the U.S., with growth outpacing even the biggest states like California, New York, and Texas. But the reasons behind Florida's rapid rise go beyond its sunny weather and attractive tax policies. The state has become a magnet for both businesses and skilled workers, leading to an economic boom that's reshaping the national landscape. This growth is a stark contrast to the challenges faced by many other states, where industries are struggling to adapt to a post-pandemic world and the changing dynamics of the global economy. As we dive deeper into Florida's economic miracle in the next section, we'll explore how this state is bucking the trend and what it means for the future of the U.S. economy and the world at large. Florida is now the fourth largest economy in the U.S., on par with entire countries like Mexico or Spain. That's right, this sunny state is more than just beaches and theme parks. It's becoming an economic powerhouse, growing faster than even California, New York, and Texas. But here's the twist: this growth isn't coming from the industries you'd expect. Florida's economy is diversifying in ways that have economists intrigued. Agriculture and tourism still play a big role, but now the state is seeing a boom in finance and technology. Miami, for instance, now has the highest concentration of international banks in the U.S., even surpassing New York City. And it's not just big businesses moving into Florida is also attracting a flood of highly skilled workers. But is this rapid growth sustainable? Or could it come at a cost to the rest of the country? Here's where things get complicated. Florida's success story might not be as rosy as it seems. The influx of businesses and skilled workers has been great for the state's economy, but it's also creating some serious problems, both for Florida and the rest of the U.S. This economic migration is draining talent and resources from other states. Think about it: if a tech worker leaves Silicon Valley for Florida, California loses out on their tax revenue and might even struggle to find someone to replace them. This phenomenon, known as brain drain, could end up weakening other states while Florida thrives. And it's not just about people, it's about money, too. When wealth moves to Florida, it takes capital away from other states, creating a ripple effect that can destabilize entire regions. This internal competition between states could lead to a race to the bottom, with each state trying to outdo the others with lower taxes and fewer regulations. In the short term, this might attract businesses, but in the long run, it could undermine the stability of the U.S. economy as a whole. Now, let's talk about the elephant in the room. Is this growth sustainable? Florida's booming industries are heavily dependent on factors like low taxes, favorable regulations, and a steady influx of new residents. But what happens if these conditions change? What if other states start to catch up, or if there's a backlash against the policies that have fueled Florida's rise? Moreover, Florida faces some unique challenges, like its vulnerability to natural disasters. Hurricanes, rising sea levels, and other environmental factors could pose serious risks to the state's long-term economic health. And let's not forget about the social and political tensions that can arise when a state grows too quickly, attracting people from all over the country with different backgrounds and expectations. So, where does this leave us? Florida's economic rise is impressive, but it's also a double-edged sword. It highlights the strengths of the U.S. economy, but it also exposes the risks of internal competition and regional inequality. As we watch this story unfold, it's crucial to remember that economic growth isn't just about the numbers, it's about how that growth is distributed and who benefits from it. So, what do you think? Is Florida's rise a sign of a stronger U.S. economy, or is it a warning of challenges to come? Let us know in the comments below. And don't forget to subscribe to Money Dynamo for more insights on the global economy.